All right. Good morning, traders, and welcome to the opening bell. Today is Monday, June 29th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. We are heading into a interesting market dynamic. We got a skirmish over the weekend with some kinetic fire, both on the Iran and U.S. side. That seems to have abated, and it looks like we have an agreement for some sort of technical talk in Doha tomorrow to resume. Markets are taking solace on that. You are seeing equities trading mostly in the black, not by much. The U.S. dollar is coming off a little bit that resistance zone that we talked about last week, and that's kind of the focus on all the U.S. dollar crosses. They're all testing major pivotal zones into the start of the week. Now, it is a shortened holiday week with major event risk on tap heading into the close. Wednesday, we get those ADP figures, and Friday, non-farm payrolls. So the markets are poised for update on the labor markets. We'll go through all the US dollar crosses and more. Any questions or trade setups you have, feel free to throw them on the message board. We'll be getting started in just a second. All right, great to see everyone in the room. Hey, Angie, Ashish, DeRay, James, Kevin, Latania's in the room. Great to see you. Good morning, Ruth, Seth. Not going to get to everyone, but great to see you this morning. Here's what the DXY looks like right into the start of the session. You know, the focus of the resistance zone that we talked about last week remains. If my charts want to update, here it is, 101.77 to 101.91. That's the September 2024 high, and the high day close. Been a clear-cut pivot in price ever since. We broke through it in October of last year, support in April before breaking lower in 2025, resistance in May. Here we are with resistance again. It's also on the upslope for the same gradient that we've been tracking off the lows from May. So we were looking for reaction there last week. We talked about it on Thursday and Friday. It pulled back, and initial support is being held at 101.14. That's the focus right now into the start of the U.S. trade session. It's the 38.2 retracement of the entire decline off the highs from last year's. I'm sorry, my chart's taking a little bit to load here. There we go. Same slope we've been tracking, right? There's the upper parallel. Here's the reaction. Here's the median line now on 101.13 over the next couple of hours. So I'm looking for reaction here. Look, the threat is that you're coming off of confluent uptrend resistance for potential test of uptrend support if the median line breaks. So 101.14, 101.13, just a little bit lower is that slope. If we break below the median line, sure, potential for a setback still within the confines of the May upslope. Okay, so 100 spot 77, 64. Ideally, losses would be limited by that if we're heading higher, but proper bullish invalidation has to be 100 spot 15 to 35. That's the 2024 low, the 2024 low close. It was the highs from August, the highs from November. We rallied and failed there back in March. It was the high back in April, right? And that was the opening range breakout. That's bullish inval. Okay. Initial support. Ideally, we hold 100 spot 65. If we're heading higher, bullish invalidation 100 spot 15. Resistance 101.77 to 92. That's the breakout you need to mark resumption. Then you're looking for 102, 102.77. And 102.71, excuse me, is the 100% extension off the low. That's the implications if this barrier breaks, is up here. So the levels are well defined, but the threat still is that this near-term advance might get a little bit of a kickback within the uptrend. DXY levels look spectacular. Euro is not quite as clean. It's the same setup, but no matter how I try to figure this, I can't get a good slope that's as clean as DXY. Look, here's the daily chart. This is the slope we've been tracking on the weekly for the euro, by the way. That doesn't change. It puts us right at a major lateral level. This is the 38.2 of last year's rally, okay? This is the lows from July. It's the high close from April. We're right there. You got the median line for the multi-year uptrend from 2022, and that's being tested right now, okay? So this is the same slope. In fact, fancy me one moment. The monthly chart. I showed you guys this on Friday because I was writing the quarterly forecast, which got published on Saturday, by the way. But this is the chart that's on there, 1355. That's the 38.2, the yearly rally from last year. That's the median line. We're there right now. We're there right now. Momentum, same support trigger. We're there right now. Now that's the monthly chart. So this matters if we break here and close on Thursday, on Wednesday. What is Wednesday or Tuesday's last day of the month? So if Tuesday tomorrow closes below 1355, guys, that's a break all day long, period, exclamation point, end of paragraph. Until we do, you're sitting at support, plain and simple. That's the monthly chart. Daily chart or weekly chart shows the same thing, right at support. Daily chart, there's that 38.2. There's downtrend support. Intraday chart, not quite as clean, but there's the rebound. Checking resistance right now, 1404 into 1416 is the low day close from back here in March, and the July low, okay, from last year. So, excuse me, from 2025, yeah, last year. So we're right there. Initial resistance being tested. I have bearish inval at 114.92. If we break above this structure, it would necessitate a move back above the median line. It would necessitate a move above channel resistance from May. That's the break that would suggest a more significant low is in place. So the levels aren't quite as clean and close as DXY, but we are checking initial resistance right now. Okay, there's 1355. That's the break you need to mark resumption. Here's that chart. Downside level beyond that, you're looking at the 2023 swing high at 1275 and 1214. It's the 2024 swing high. So the euro not quite as clean from a slope standpoint, but level standpoint, very clean. Laterally, we're coming off of a main key technical level. This is the bounce. If we're heading lower, initial resistance is 114.16, but if we're heading lower on this stretch, 14.92 would have to hold any rallies. You need to close below 13.55 to mark resumption. Make sense? Sterling. That key support that we were talking about for so long is still yielding this bounce. This is 3140 into 3153, the 100% extension off the highs from March, the low from August and May of last year. Really nice pivot in price. Dropped right into that last week. Here's the bounce. Now, a basic 236 off the high gives you 3265. That's initial resistance. Bearish invalidation is 3326 into 33. You need to break above this to suggest a more significant low is in place and a larger reversal is underway. Initial supports 3190 again, basically 32, that 38.2 retracement. You need to break below 3140 to really open up the next leg lower. More so than euro, at least here the slope is really giving us a little bit more of a guidance that it is a downtrend, but you're at slope support. For sterling's part, the implications of this break are much bigger. Why? Because this is the objective yearly opening range low. We've got to close below it. Technically, that's a break. But remember what I always tell you, nothing supersedes basic support and resistance. So while the yearly opening range has broken, you're at support. That's the level that'll unleash the leg. Andre saying, so if it closes above 1350, it continues up? No, but if it closes above 1350, the immediate downside is at risk. So Andre, that's how I approach things. Just because you're at support doesn't mean we're bullish. It means we need to be less bearish because we're at support. For us to get bullish, we would need to break some sort of downtrend resistance. We haven't done that yet. Here's sterling on the weekly. Euro, opening range broke. We're still at support. Sterling, opening range never broke. We're right there. You see that? That's 31.90. And although we slipped below it intraday weekly close, that's the yearly opening range low. So Euro's flirting with a break already on the yearly low opening range. Sterling isn't. So that break would validate the next sharp move, but we need to clear 31.94 on a weekly close basis. Daily close near term, you need to clear 31.40. Does that make sense, Andre? So for the British pound, I'm thinking you're 1350. I'm assuming you're talking about euro. For the sterling, you would need to best 32.60 near term to suggest a more significant. This is last week's open. You can get rid of that. But if you break that, that's last week's open, the range highs. That's a basic 236. That's risking a test of the median line, and that's the test that if broken would suggest you got a bigger low here. But anything sub 31.40 man, there's another 100 pips before you start to run into any major technical support. And that's the July high, the September low day close. So big inflection zone, big resistance on DXY, big support on Euro, big support on Sterling, big support on Aussie. Not quite, but my problem with Aussie is that the support is stacked. So remember last week we talked about 68.80. 68.80 is going to be a basic 618 extension from the decline. Really nice level. If I take you back to the weekly charts, going backwards here, 68.76 is also the March low close. So here's what it looks like. Boom, right there, right there. So the upslope broke, bam, we just dropped into major lateral support, and that's been holding. This is week number 2. We're testing it. So you drill down to the daily chart. You can see that break. Again, here's downslope support. This is just a parallel of this basic gradient. And there's the response that we got. I was talking about this in the earlier webinar, my weekly technical I just did. My problem with Aussie is that even if the downside breaks, you still have a couple of levels that are kind of stacked up right below that could cause some problems. And the 200-day moving average gives you 68.60, and then the March low gives you 68.33, and that converges on slope support again, basically over, into the close of this week. So do I want to sell at the bottom end of a multi-month decline with slopes, with major support just stacked up below? No. If you're holding shorts, this is a good candidate potentially for a trailing stop. Bring down your protective stops to break even or better. Initial resistance is 69.42. Bearish invalidation is 70 proper. A break below this. Watch those two levels. The next major break would be basically 68.33. Just a little bit lower is the 50% at 68.21. But that's the break that would really unleash the next major leg of the decline. You're talking about the 2025 high close at 67 and change. So little bit provocative. What's the word I want to say? A little bit promiscuous here. I don't know. Tricky. All right. Things are getting hairy as you head into the bottom end of this zone. And again, it is the end of the month. It is the end of the quarter. It's a shortened holiday week with an extended holiday break ahead. Use caution. That's Aussie dollar. Limited on Aussie data this week, not much to talk about. By the Euros part, I did forget to note, we do have the Eurozone, or the ECB rather, conference on Wednesday. It's basically like a whole bunch of central bankers. Warsh is going to be there, Lagarde, Bailey, Macklem. So a whole bunch of heads of central banks are going to be there. And it, oftentimes can get some commentary coming out of there. That comes out. Then you get some PMI on Wednesday, and NFPs and ADP on Thursday is going to be, or ADPs on Wednesday, but NFPs on Thursday is going to be sort of the big major hitter on all these dollar crosses. All right, dollar CAD. So the exhaustive trade that we talked about on Thursday and Friday is still sort of the focus. You're not getting much pullback. Initial support is still holding. Remember, dollar CAD's been one of our most spectacular setups. We've loved this ever since the break of the yearly open at 37.25. But we started to get a little bit more cautious last week as we were heading towards the November high close. And the November 2024 swing high, that pivot. So we broke above it. We faltered at the upper parallel. And last week we highlighted support at 41.66, 41.78. We dropped into it on Thursday, held on Friday, and we tested it again today. That's still initial support. So technically, this hasn't even broken any uptrend support yet. So while the top side does look vulnerable to me, just on account of the momentum starting to come back, you're still an overbought, so it's not a reason to get bearish. Just looks a little tired on the upside. That's still the level that would need to break before you start to even think you'd get a pullback within the uptrend. So watch 41.66, 41.78 support into the start of the week. If you buckle below that, 41.09 is the November high day close. I'm constructive above 40.35 right here. Okay, that's near-term bullish inval now. And the next level up on the upside of significance is 42.92. That's really important. That's the 618 of the drop, converges on uptrend resistance basically on Wednesday. But that's your next major hurdle for the bulls on dollar CAD. Limited on CAD data this week as well. You don't have anything major coming out. Questions on Loonie? Last but not least, here's dollar yen. There's not anything to update, guys. Resistance is still holding, but the bulls are relentless. 61.68 to 161.95. That's the 2024 high day close and 2024 high. We hit it back on the 18th last week. Rock solid. I highlighted this in the last webinar as well. On Monday, of last week, okay, we registered this massive candle. The entire week's range remains encompassed in that single candle. In fact, the top end of that candle is right at resistance, and we're testing that right now. So as I've been saying on this trade, this is, the technicals versus the threat of the fundamental backdrop where you could get BOJ officials coming out at any time with intervention. The technicals are constructive above 60.36. You're at resistance at 61.95. Topside break opens up 63.33. Plain and simple. All of that with the intervention threat looming. Take it as you will. Questions on dollar yen? All right. Made good time today. Gold still making a little bit of recovery, but holding initial resistance at former support, 40.74, 40.98. You guys remember that was our level in the sand. We've been talking about that level for a while. It's the 618 extension off the high, the March lows. Also, it's actually the October weekly reversal close from last year as well. All of that was right there. We didn't close the week below it last week. Okay, we closed right in that range, actually. So we're trying to push through it again here. It's not a confirmed break of that level. We're checking it as resistance. If we break above last week's open at 41.55, that would be a near-term indication that a potential low might be in place. But other than that, guys, you're still bearish below 40.98. We're trading right below resistance. Let's see if we get a weekly opening range move here. I was of the mindset, you guys all know here in the room, I was of the mindset that this was a more significant low that we registered earlier in the month. But that was shattered once we closed below 41.12 or 42.12, excuse me, the low day close. So that invalidated that assertion. Here we are now testing that same lateral zone as resistance. Watch for that to be the tell. We are getting divergence into the low, price action with a lower low, the oscillator with a higher low. It's not the strongest signal, but it's there. So we would need to at least clear last week's open to get things going. Other than that, technically the threat is still lower. So that's gold. Oil is still trading right below that key support that we were talking about at 73.84. Remember, that was the 200-day moving average. That was 100% extension off the high. We bobbled off that back on the 18th. We closed below it last week. That's now near-term resistance. Initial resistance soft is 71.90, but 73.85 is near-term resistance. Bearish invalidation is 80.54 into 79.60. That's a major, major zone. Here's what it looks like on the 4-hour chart. Same slope we've been tracking, guys. Been spectacular. There's resistance. There's bearish invalidation. Next downside targets are 66.29 and 61.43. So there's a summit in Doha tomorrow for a technical summit to kind of clear up some of this, skirmish that we got over the weekend with fire being exchanged on both sides. It's the craziest ceasefire I've ever seen, but the markets are, like I said, taking it in stride. So keep your eyes on the headlines. I'll keep you updated on MB Forex if anything comes out of that. But, all intents and purposes, oil still remains pretty well defined within this downtrend. Initial resistance 73.84, bearish invalidation 80.75, downside target 66.28 and 61.43. Bitcoin. Key support is upon us, and that's 57,885, 58,725. That was the target for the yearly forecast that we highlighted in January. We finally hit it last week. So you got the 2023 uptrend support there. You got the 2025 downtrend support there. You got the 618 retracement of the 2022 advance there. You've got the August 2024 low week close right there. We're trading there right now. That's the weekly chart. Drill down deeper into the daily chart. We're also testing that really nice slope. There's the downtrend. So you're right there right now. Initial resistance 62,795. That's the February low close. Bearish invalidation at the highs that we made at that swing earlier this month. That converges on the medium line, 67,253. If we break below this, there's nothing until 52,204. That's the 100% extension from the decline off the high. Boom. So that's the threat if this were to give out. But the focus this week is on 57,885. Now you're seeing divergence here as well on the weekly charts. We're taking note of that. You're seeing even some divergence on the daily charts. We're taking note of that. But all things held constant, you're sitting at support. Do note that from a timing standpoint, these next few months are primed for a potential low in Bitcoin. That on the 4-year crypto cycle, and the fact that the most of the major pullbacks have been in the range of 52 to 54 weeks on the pullback. Not going to get the full extension to 52 weeks, but right around there starts to settle in the October, September range. So we're getting close from a timing standpoint. We're at major support zones. Watch for a reaction there on Bitcoin over the next few weeks. All right. Okay. Any other questions or trade setups? Feel free to throw them on the message board. Otherwise, we'll wrap it up here. You guys got 9 minutes to spare today. Heading into the end of the month, heading into the end of the quarter, shortened holiday week, non-farm payrolls on tap, extended weekend. Stay nimble, stay light, reduce position size on any new positions that you have. Make sure all risk is well defined, especially as we head into Wednesday and Thursday with those employment figures out of the US. And we'll take a snapshot tomorrow morning of how everything looks, and we'll go over all these setups again then. Have a awesome day trading, guys. Best of luck, and I will see you tomorrow morning. God bless.